everybody, and welcome to this episode of the DAS Trader Newsroom. This is Deal or No Deal on U.S. sovereign debt crisis. D-Day for the debt crisis is June 1st. That is just a few days away, just 3 trading days left until the basically debt crisis comes to a head. And my name is Michael DeJoy. I'm the Director of Education here at DAS Trader. And I'm going to jump right in and get started talking about the sovereign debt crisis. The debt ceiling talks have intensified as the U.S. sovereign debt crisis enters its final hours. Just the other day, Joe Biden met with McCarthy, Speaker of the House McCarthy, as the Fitch Ratings issued a ratings watch negative alert, stating that the U.S. AAA status is in threat or in crisis, potentially going to be downgraded from that U.S. AAA status. Now, obviously, this is the linchpin of the entire world financial system, meaning that the U.S. dollar is the currency that backs the entire world's financial system, and this is a threat to the entire system. This is a systemic threat. Question on everybody's mind is, are they going to be able to come to a deal as they did in 2011? However, the political dynamics in this particular instance is quite different, being is that the Republicans, the radical portion of the Republican Party and Democratic Party, are very far apart, from coming to an amicable agreement. Now, what has happened in the past has been that the representatives have basically kicked the can down the road. They came to some kind of agreement that basically increased the debt ceiling up, but with some major concessions, and those would be continuing to service the debt, making debt payments on U.S. Treasury notes, which is what most banks hold as very, very secure capital. They hold U.S. Treasuries as secure capital. And obviously, they would make payments on the debt, servicing of the debt, and they would make payments to the military and to Social Security, as many elderly people in the United States rely on their Social Security benefits, to pay their ongoing bills. The other big one is payments to Medicare and Medicaid, which are the financial payments towards the healthcare system of the United States of America for the elderly and for those who don't have any insurance. So these would be the priorities that you'd want to keep in place. But I think that the problem is the concessions on all the other spending, on all the other policy spending that is done by the federal government. And that is still very, very far apart. So hopefully they can come to some kind of agreement in the short term that gives us a little bit of confidence. And while this is all going on, NVDA is holding up the entire market as it nears a $1 trillion valuation. Now, the NVDA has been on fire because it is basically gone from being a graphics card manufacturer to being a leader in artificial intelligence, AI. And you can see that the chart has just broken away. We have our DAS Trader chart here being displayed to you. NVIDIA has broken away from, the low 300s to up there, 380 area. So NVIDIA is the run getting a little bit overdone. Not sure about that. Maybe there's a bit of hype all related to AI and AI in general. But certainly NVIDIA and the others leaders in the AI space, namely Microsoft, Google, certainly Amazon has its AI play in there as well, and Meta. They are all working on various different AI offerings, but the big ones are certainly Google, Microsoft, and NVIDIA, and all of these AI plays. Maybe they're a little bit hyped, but these companies are massive tech companies. NVDA has held up the entire tech sector. NASDAQ has pretty much outperformed, and we're going to see that when we go to the charts in just a few moments. But NASDAQ has outperformed the S&P and the Dow most certainly, as NVIDIA has really held up the entire sector. Apple also has an AI play. We're going to take a look at Apple stock, which has been up, pretty considerably. But most of these tech companies have an AI offering, and certainly technology has been outperforming all other sectors and certainly holding up the markets in general as of late. And coming back to the debt crisis, so far there has been little progress made in the debt talks, but the 2011 debt crisis solution has thus far been rejected. Basically, there was a very amicable situation between then President Obama and the Speaker of the House. And pretty much it was agreed to that the ceiling would be increased. I believe it was the $30 trillion mark was what it was increased to at that time. And then we started having these problems again. But the priorities were set that it was Medicaid, Medicare payments, Social Security, military spending, and then, of course, those, various social programs that were deemed most important were the ones that were, kind of taken off the table, and those payments were made sure that they were going to go out and the debt ceiling was increased. But the history of kicking the can down the road and making very last minute kind of resolutions, even if they are temporary band-aids on a kind of long-term systemic problem that the U.S. federal government has been overspending for quite some time. This is a very dangerous game. It is just apropos that it's coming, at a time when we are honoring all of our fallen heroes for this Memorial Day weekend. Monday is Memorial Day. The markets will be closed. Memorial Day weekend is where we honor all those who have fallen in service of our country, both men and women. And certainly, a few days, just 2 days after, is when the U.S. federal government, which those people died to preserve the U.S., United States of America, that the entire system is being put at risk by this, very big political impasse, and very disconcerting and dangerous situation for the country and for the entire world financial system. So I really hope and pray that they can come to some resolution in the near term. But on that note, we are now going to skip and jump to our market analysis section. So let's review some of our charts on our dash trade. I'm just going to switch my screen sharing. All right, so here we are. This is my dash trader software. I'm going to first take a look at the SPY. Here is SPY. So we have a buy setup on the SPYs. We had a buy setup, meaning that it's 1, 2, 3, 4 bars down. We gapped up onto the 10-period moving average, but you can see that the overall market has been really in a very boring range-bound condition as far as technical analysis goes. We are near the top of the range, so that would certainly indicate that maybe we were going to be moving back down to support. I'm going to put some lines on my charts here. Going to use trend line raise. I'm just going to project those trend line rays out. And I'm going to just use another trend line ray right here from the top of this pattern and project that out. So here we are near the top of our trend line, and certainly you would expect the market to kind of come in a little bit based on that trend line pattern. And we're going to go just bring up the QQQ. You could see just by taking a look at this chart that the NASDAQ is in an uptrend. I mean, this is a breakout, from an ascending wedge, which is a bearish paddle, but it did break out. And then we've had our first pullback and then our secondary breakout, which actually occurred today. But today's bar is a doji-like bar. So generally, a doji is a signal for uncertainty, a signal for change. And, potentially this is a reversal sign. If we gap down tomorrow, that would be a real big indication. That would be called an island doji top. That would be a deadly doji. and that would be a very, very bearish signal for the markets. Any kind of island top reversal is that you get a big gap up, people are barreling in, and that usually is an indication that maybe there's a reversal at hand. Technology has been holding up the market. If I go to the DIA, you can see that certainly the Dow closed, 4 days, 5 days down. So the Dow Jones Industrial Average is a very different picture so we call that a bifurcated market. So the NASDAQ technology is up, whereas S&P somewhere in the middle, and then the Dow Jones is looking much more bearish. Dow Jones is in a downtrend, whereas technology is in an uptrend. S&P is in a sideways flat trend. Let's take a look at some of the stocks. Let's take a look at specifically NVIDIA. NVDA, big, massive gap up. I mean, literally NVIDIA gapping up from 300 all the way up to 390, almost kissing 400 today, and then closing down at 377. NVIDIA stays bullish all the way to 350. So NVIDIA could fade down for 3 days, 4 days, just to digest this gap. But it's a massive gap up. I would say I would not be buying this gap until it faded a little bit. This is not a gap that you want to barrel into. This is a massive gain overnight. But that did really, really help the technology indexes. I'm going to look at Apple AAPL. Apple making a tremendous run from the lows of 124 all the way up to the 170s. You can see the red line on our price by volume on our dash trader charts. That is the point of control for our Apple stock, which we've been saying for many, many months, if not years. So goes Apple, so goes the market. So that's Apple. And then we have Microsoft. So Microsoft is really the other big player in the AI space. So NVIDIA is a big AI play, artificial intelligence play. Microsoft, and we've been playing around with the Bing AI from Microsoft, and certainly it's available in various different applications, but specifically Skype and as among others. But we've been playing around with that, and it's very easily accessible, and it's pretty intelligent as far as AI goes. But certainly Microsoft also benefited in sympathy to the gap up in NVIDIA. So let's just go to the next one, which is the other big player in AI, which is Google. Google getting a gap up, but certainly not benefiting as much as Microsoft. But Google is already up quite considerably from $85 up to $124. And last but not least, this is interesting because Meta has made a big run to the upside, nearing its 52-week high. Meta took a bath early on when Facebook was facing all of those hearings and political inquiries, etc. But certainly a gap up to the upside, and then a little fade on Meta. But Meta, continuing to hold up very well, and also benefiting in sympathy to NVIDIA et al. Last one, Amazon, AMZN, also a small player in the AI space, not benefiting quite as much as the others, but certainly also, near its 52-week high, having recovered quite a bit off of its lows at the end of the year, at the end of 2022. Now, GBTC, which is the Bitcoin tracking stock, Bitcoin, you would think would benefit from all the uncertainty over the US dollar, but it seems like the US dollar is strengthening because gold is also up. And maybe that's just showing confidence that they will come to some kind of a deal, kick the can down the road, some kind of short-term resolution. But needless to say, both the old man gold and GBTC, which is the tracking stock for Bitcoin, both showing some significant strength, as of late. And that's also evident in USO, which is the tracking ETF for the forward futures contract on US oil. Oil is down a bit, which is good for the US economy and the world economy, because it kind of forestalls the inflationary problems that have led to a steady rise in interest rates as of late. Because oil is the prime commodity, U.S. dollar was the prime currency, which is why it's putting the whole system at risk. But needless to say, oil is not rising precipitously as a result, because if the world economy starts to slow down, there'll be less of a demand for oil, therefore increasing supply and therefore putting some pressure on the price of oil. That also, oil will be down because it's denominated in US dollars. And if the US dollar is up for some odd reason, even though we have this pending debt crisis, we will see that would generally push down the price of oil, as oil is denominated generally in US dollars. So that explains that. We have a live DAS training at the NASDAQ market site with closing bell ceremony. The training is on July 17th. I will be your instructor and host. If you are an avid DAS user or if you're somebody who's just getting started, we will be going through an extensive one-day training where you will learn everything there is to know about the DAS Trader platform and getting an awesome life experience enjoying the closing bell ceremony at the NASDAQ market site. We are going to start the day off at 8:30 to 9 a.m. with a meet and greet and light breakfast. And then it's scalping, gap trading, intraday trading, swing trading, options trading, and more. We are going to make a layout for each of these styles of trading. We will break for lunch, go to a nice lunch somewhere around the Times Square area, the crossroads of the world, and then we will start going through setting up hotkeys, using the script editor, and then, of course, using your trade signal software. That is the advanced scanning application built into the DAS platform. We will be going through all of DAS's advanced features up until 3:30, at which time we will go downstairs and witness the closing bell ceremony. And then after that, I'm going to take everybody out for some cocktails in the Times Square area for a nice little happy hour liquid break. Anyway, I hope you decide to join us on July 17th. That is Monday, July 17th. The early bird discount will be ending in mid-June, so make sure seating is very, very limited. So make sure you sign up soon, so you make sure you got your spot. This is a once-a-year event where it is open to anybody who wants to get the DAS training and attend the closing bell ceremony. So please join us for that upcoming event. And also stay up to date with all things DAS by signing up for our monthly newsletter and email. Simply fill out the form at the bottom of the website at www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and the DAS Trader Newsroom reminders. Follow us on social media at LinkedIn, Twitter, Facebook, and Instagram. Thank you so much for joining me, and have a wonderful Memorial Day. Trade well, everybody.